Happy Friday, everybody. We hope everybody had a great holiday season and Happy New Year. Getting off to a rollicking start here in 2026. I'm sure everybody's aware of the situation taking place in Venezuela with the capture of President Nicolas Maduro and then his extradition to the United States along with his wife. That's something that has made a lot of headlines. And the reason we want to talk to you is that a lot of times these geopolitical events, especially in this current climate where it's 24/7 news cycle, seem like a really big deal, but it's really not the event that happened that's the big deal. It's parsing deeper and really understanding what is going on beneath the surface. So first of all, let's just take the energy industry. The energy industry is huge. It's still primarily focused on fossil fuels. And Venezuela has one of the biggest reserves, if not the biggest reserve in the world. The other thing about Venezuela is they do not have the infrastructure to pump the oil that they need, given the reserves that they have. And so this is a blatant play by the administration for oil, right? There was no, it was cover, the narco, all this stuff had nothing to do with it. This was a play for oil. The problem is a couple things. Number one, it would take years and billions of dollars of investment with a stable government to get the oil industry in Venezuela producing where it should be. Now, we all know that that stable government piece is highly unlikely. Our record with nation building after the Marshall Project is pretty bad. Everywhere we go, we end up making that country a disaster for a long period of time, if not permanently. Libya, Iraq, Afghanistan, to name a few. So this is not going to work out anywhere near the way the administration claims it is. It's not going to be this boon to the oil industry or to the price of gas at all. What it does do is it raises other risks. It raises the risk that we end up with invasions from Russia and China because they see the United States is doing this, and why wouldn't they do it? Right? That could really increase the risk premium that people are demanding on assets around the world. It could also send stocks potentially into a tailspin. Now, what are we doing to protect against that? We're watching very carefully right now a few factors. One are what are called credit default swaps. These are instruments that are traded where people can buy or sell protection on bonds. And basically, one side is betting that they're going to default, the other side's betting that they're not going to default. And how these credit default swaps move, how they're priced, gives us a look into the risk in the bond market. We're also looking at interest rates. How do interest rates react in different countries around the world? While stocks get most of the focus, it's really the bond market that drives the economy. That's how most companies raise cash. That's how governments raise cash. And this is the market where you can really tell what's going to go on in the economy. So between those credit default swaps, right, which is a bet on whether or not a bond will default, and the bond market itself, that's what we're more concerned about. And we're more concerned with holding good, high quality bonds of companies and governments that we feel are going to be stable or at least more stable in the long run, safe havens. On the stock side, we're in the long term. We're looking at this for the long term. We are not here to try to play the Venezuela trade, as you'll see so many different publications putting out right now. We want to own good, stable companies, and we don't want to own too much of companies like a Chevron potentially that are going to be involved in all kinds of up and downs because of their involvement in Venezuela. And so in your portfolio, we are looking long-term in stocks, we're looking high quality in bonds, and we're looking for risks that start to appear. Now, how this matters to you is if you have a major material change, got married, retired, received an inheritance, these are things that might require a change or an update to your asset allocation. If you're just a little bit worried, and there's nothing wrong with that, with the current situation in the world, hold tight. We're in this for the long term, and we are looking out for those cracks that could give us a little bit of a hint as to where the economy is headed. As always, if you want to have a conversation with us about your portfolio, your goals, your risk tolerance, reach out at any time. We'd be happy to talk to you. Have a great weekend.